Happy Monday, January 22nd, 2024. I'm Rhonda Porter, author of The Mortgage Porter and loan officer at New American Funding, here with your weekly mortgage market update. So last week, mortgage rates moved slightly higher, and I'm talking very slightly. On Monday, they were around, Tuesday, Monday, the bond market was closed, about 6.6, and then raising to about like 6.75 as of Friday, and this is according to Optimal Blue's mortgage market index, which is this page that we're on here. And this is based off of an average of locked rates. And so this information was last updated on Friday. So it's lagging information, but it does give us a good idea of what the trends are and what the markets are doing. Now, if I switch over to MBS Highway, this is what I use for my day-to-day for learning, getting market updates daily and learning which way bonds are reacting, which is live, we can see that right now the markets are up about 9 basis points. So trending for the better, very slightly, nothing dramatic going on here right now. But we do have some events going on, or economic indicators coming out later this week that can impact mortgage rates. On Thursday, we're going to have the GDP, and on Friday, we have the PCE. Both of these report on inflation, and which impacts mortgage rates. So the more that we see inflationary kind of data showing that inflation is not in check, causes mortgage rates to go higher, because mortgage rates are based on mortgage-backed securities, which are bonds. But as we see inflation get into check or get more in line, then we'll see mortgage rates to continue to improve, and that's what's expected. And last week, Fannie Mae released their housing forecast for this year and 2025. And they were actually more optimistic than what they have been in the past. So they're now have updated their forecast to show that in the fourth quarter of this year, we should be under 6%, and for a 30-year fixed. And next year, that will be ranging in the mid-5s. So this is great news, especially if you're a home buyer. So this is something that we're all looking forward to, with having lower rates. So one thing, though, to keep in mind, if you are thinking about buying a home, that I would probably not put off buying a home for lower rates, because one, you don't know if this is actually going to happen. It is all a forecast. But also, the lower that rates get, the more we're going to see people enter the market, which is not going to help home prices as far as staying down. So, and with our lack of inventory, I don't see home prices budging down that significantly. So another option that I would recommend looking at, if you can afford it, is if you do find a home that you like now, is to really consider buying it now, and then you can always refinance later should rates come back down. This allows you to start paying down your equity instead of paying for rent, and also allows you to enjoy that appreciation that you'll get buying earlier, and then assuming that home prices go up. So just something to think about. I've got a lot of reports that I could prepare for you so you can make an informed decision, and happy to help you create a strategy for your home buying needs. Hope you have a great week, and I'll talk to you soon. Take care. Bye-bye.